Hello and welcome to another edition of Islamic Finance Weekly, where we discuss the key developments in the industry and opportunities for Nigeria to tap into. In this edition, we bring to you our recent interview with Dr. Bashir Oshodi, Group Head Non-Interest Banking Sterling Bank, on the prospect of deploying non-interest finance to address socio-economic challenges in Nigeria.
It's amazing to know that the percent of GDP, mortgages is just 0.5%. That's tiny, considering the fact, of course, just like you mentioned, the 80 million deficit you're talking about is 2012. It's much more than that now. How do you solve that problem? Number one, we're so particular about the formal sector. So you can understand why, as a percent of GDP, it's just 0.5%, because those informal sector use about that amount. Considering the fact that many of them don't even have mortgages. We then start to look at more informal sector. By informal sector, somebody working in a one-man business can be seen as informal. And most people in Nigeria are working in such, setting, So how do we get them all to have mortgages, right? Yes, let's go to the formal sector on the one hand. On the other hand, let us change the kind of contract that we use for non-interest banking. So particularly, what happens is that, like more advanced economy, you can get 20, 30 years, we call it own finance, are probably what to use on non-interest banking. In Nigeria, you can barely get 5, 10 years, right? Now, what we're seeing is, and that's because everybody's scared you're going to lose your job the next day or the next month or the next year, right? So what then needs to happen is that we need to have, I prefer to go for a diminishing mutual structure, or what we call the diminishing partnership structure, that combines equity and lease, such that after 5 years of paying for your own finance, or a mortgage in this case, and you're unable to pay at some point, let the bank sell the asset, and then you have your share of equity. You have your share back, that way, even if you get a 10-year mortgage or 15-year mortgage and you pay for 12 years or 13 years and you can't pay anymore, you're sure you're going to get something back. Don't forget what you're going to get back is the present value of your share of the asset. Of course, in Nigeria, property value appreciates all the time. So when you say present value, it means that you're going to be getting more money than you're actually putting over time. So what we do most of the time is the lease structure. Under a lease structure, the bank takes ownership, the bank is happy. When there's default, the bank says, I'm doing out the asset, and then, which is Sharia compliant, but it's not good for, it's not good long term, right? So these are kind of structural changes that we need. So first, let's have a look at the informal sector. Of course, I've described what I mean by informal sector. And secondly, let us change the underlying contract to make it more friendly to clients.
Looking at the challenges of a 22 million plus housing deficit in Nigeria, Dr. Oshodi gave insight into the opportunities for addressing it through various provisions in the non-interest finance market.
The truth is, if you want to make money from banking or transactions, you have to do the very big transactions, which of course we're doing, that's why we're here. But at the same time, to truly touch lives, it's what we call democracy Sharia, the primary purpose of, the concept of Islam in the first place, or Islamic finance as a whole, is to touch lives, positively to make people smile. Now in Nigeria, you have at least 98% of sectors that are micro and small. 98, that's a lot. So if 98% are small and micro, it then means that you cannot ignore that sector. So there's nothing wrong if you allocate some funds to that sector. We've done that in sterling, and maybe you need to put in a lot more. It's okay. Here is so much money. We're going to reduce the pricing, on the fund. We don't want you to bring collateral because you don't even have it in the first place. We're going to accept personal guarantees. We've done that. So the idea now is how do we scale? So rather than give facilities to 100, 200, or 500 people, how do you give it to 500,000 people? And how do you make it digital so that it's so easy through your phone to get these facilities? Because the truth is that from experience, a lot of the very microtransactions really don't go bad because the guys are not strong enough to want to fight you or things like that, and so they always want to pay back. So on our own side, what's very important is how do we allocate a lot more, considering the fact that we're surely not going to lose all that money. Yes, 70% may go bad, but it's going to be too small compared to our total portfolio. And that's what that's what we should be doing right now. And of course, we make it as digital as possible. So on people's phones, they can get this things done. They've done such in say, Pakistan, for example. It's what called the Akwat model. Apart from the Grameen model, the Akwat model, they simply take zakat, alms, friendly deposit or contribution, put into a pool, they maintain very low cost, and they give it to those at the bottom of the pyramid. You know, they don't have to even, they don't keep costs at all. They don't have any serious costs. They don't have to go to some building with powerful ACs and all of that. No, they just simply use community centers, you know, religious places. They give out this fast. And a lot of people actually got out of poverty in Pakistan using this model. So how do we make this a bankable concept? How do we, of course, digitize it at the same time and reach out to a lot more people, regardless of faith? That's what we have to do. We're conscious of that fact. We're working out positions in that area and we're going to achieve it. But that's on the one hand. On the other hand, how do we start to create equity investments? Or how do we start to give equity to MSMEs? Because someone is got a very good idea. Technology related, for example. Lovely idea. He's got the brains, three of them, they're young guys, they're less than 25, but they don't have any money. How can the bank say, I want to take minimal risk with these guys, and I want to put this money there, I want to help them grow, you know? And, you know, at the end of the day, I mean, just going to be like a Silicon Valley kind of arrangement. You know, at the end of the day, yes, it's not going to be successful. Maybe 50% plus or minus, but at least you'll have touched a lot of lives. And so I think it's time for NonInterest Bank to start to set aside that part of profit or part of the liabilities or whatever into such. And that is a true concept of Islamic finance, you know, to truly touch lives. And that's what we have to, that's what we have to get to very shortly.
With the micro, small and medium enterprises contributing over 50% to the GDP of the nation, the alternative finance expert highlighted the areas non-interest banking can support the growth of small businesses, with Sterling Bank as an example.
Islamic finance is that you can take equity positions in companies or in projects. We've done a couple of them. So we have taken equity position in such commodity outfits. You know, we're part of it. We're patient enough to allow those businesses to mature and start to show profitability over time. And we're willing to do even a lot more. And that's it. That's on the one hand. On the other hand, we're also willing and happy to even sometimes go to the rural areas to aggregate, you know, a lot of these farmers and their produce and get them into this commodity exchange, if you like, you know, in good time. So we're working a lot of these transactions. The risk is high. So we're bringing in experts to make sure that the risks are mitigated as much as possible. And whatever residual risk you have left, we also make sure that even that is mitigated. So we're doing a lot of that right now, so we have to increase that. I mean, what do we do with excess liquidity? You know, you just have to think out of the box and create innovative ways. Of course, to impact lives, and of course, to make money at the same time.
It shared how local investors in Nigeria can tap into equity-type financial assets in the non-interest finance market, and if it accommodates futures, forwards, and swaps.
Originally, the concept of Islamic finance is equity-based. Equity, that's partnership, you know, equity, taking equity investment. You know, over time, the debt side of it grew, learning, in fact, from the conventional space, right? Because in the car, you don't want to do anything, you just want to drive a car around. So you need debt, you don't need equity, right? So the real Islamic finance is equity. But because the risk is very high, there's moral hazard. Somebody can just walk away, not put any contribution, you know. But the truth is that you have that under Islamic finance, and so Islamic banks, Islamic financial institutions, non-interest financial institutions, in Nigeria and globally, they are able to invest directly in any kind of business or in any kind of project. So of course you have that. There's what we call uncertainty. Anything that has to do with uncertainty or gambling, you know, we don't deal. So such transactions we may not. However, we have a set of forward lease and forward sale contracts, and that's the limitation when it comes to contract. There must be an asset, you know, and then you create a forward structure around it. There must be a tangible asset, a real asset. You know, it must be Sharia compliant. You know, when you meet up that, then you're good to go. So you have to eliminate interest, you have to eliminate uncertainty, gambling, and of course, unethical concern. So largely, we're unable to do a lot of those speculated deals using forwards, outside forward sale, a variation of forward sale contract, and a variation of forward lease contracts.
With an enabling policy environment and clearly identified socio-economic projects from housing, supporting MSME growth to providing investing options, non-interest finance can play a critical role in leading Nigeria's economic revolution. And that will be all for this edition on this program. You can send questions and comments to news@proshenji.com and reporter@proshenji.com. Also, you can engage us on our social media handles displaying on the screen. Many thanks for watching, and bye for now.